Good afternoon, everyone. It's 1/14/2013, and the time is 1:42 a.m. Pacific Standard Time. And as we started out today, everyone knows from last week that we said that Apple will go below 500. During the price volatility, it closes on Friday at 520. Had 183 lows and 147 highs. 507.50 was the high. 498.51 is the low. That's where you get the $8.99 range. The thing that I would like to feature is the initial drop is where we traded this off of the bottom. And you got your 498 right here in the morning, and we went right up here to 507.50. From 507.50, we dropped right back down $7.50. We came back up here to resistance at 506 and dropped another $5. Intraday, there was plenty of opportunities as a market maker. I don't know about you day traders, but we make markets. And we make markets on both sides of the table all day. There was plenty of trading here. Every time you went long, you had to sell short. And every little bounce you got in volatility, a certain amount, you had to sell short. And you came down, you made lower lows. As far as the name goes on Apple, the $520 put that was in the money, they gapped him. Now, we had these put options and had been putting people in these put options because, listen, no one says that Apple's a bad company. It has to go lower. And every move higher. We shorted it every single day last week. But at the end of the day, we remained short. And in pre-market, whatever highs were there, we shorted it. All of the live entries and exits with the video are there. What I would like to point out is how the contracts went from $15.25. So if you had these at $8 or even lower, these could have been bought for lower than $8 on the close. And my point of it is how to use the put options, understand directional markets using HFT, high frequency trading technologies that we have in the execution model. If you're somewhere at E-Trade or Scottrade or Schwab, you're never going to get the executions that we have. It's just impossible. It's a retail platform. This is not a retail platform. So the put side paid big. I would like to show how the calls got mutilated from $22 down to $8. They did have a bounce. The high was $12. That was the $500 call. That's tradable off the bottom. So when you make a market as a market maker, and we're the only market maker school out here, you buy both sides of the market at both wholesale entries. And you're getting both sides of the trade. Here, once again, guys, the volume here is 4,000 contracts, a 495 call. They hit the bottom at 1090. They were $26. People that woke up this morning, hey, they were only worth 15,000 if you had 10 contracts. Just use that number. They went down to 1020. There was a range, and everyone is getting buried, and the calls are down $14.80 for the Apple lovers. So this is definitely the wrong side of the trade. There are trades that can be bought and sold intraday in here, but the big side is the put side. And it's been working all last week, and it's been working for several weeks. Yes, you get those volatility runs off of the bottom to prices where they hit resistance, but this name is not done going lower in calendar 2013. And as far as we can see, that you got to get down to the 425 area to 450 area for me to even think that a bottom will be put in. Yes, it's oversold. A lot of fundamentals are going on. Phones are going to be a little bit weaker in this quarter, even though that they're still robust. But once again, for the people who have been slaughtered by holding on to it, you can see the headache that they have.